private market real estate family of companies employs more than 30 people and also includes a construction company, property management, finance, brokerage, and title services. Paul has a wide array of investor clients and owns and manages a multi-million-dollar real estate portfolio. Please welcome longtime DAC member, Paul Barrett.
Thank you, Ben. Wow. What a turnout. I'm impressed with how this club has grown so quickly. Thank you all for being here tonight. I am really excited to be here. I'm curious about the crowd tonight and kind of how many people are actually in the real estate business. Brokers, agents, mortgage brokers, appraisers. Okay. We were putting together this presentation. We weren't really sure, especially with the number of people that we heard were coming, which was kind of a surprise to us, exactly how to put this together. So I'm going to ask one more question of all the people in the room. How many do you think we are in the worst real estate market since the Great Depression? About half too. Okay, those are probably the people who are in the real estate business, maybe, huh? Well, Warren Buffett's one of my heroes, and I would agree we have been in a terrible market. But I think if you read this quote, bad news is an investor's best friend. It lets you buy a slice of America's future at a marked down price. Be fearful when others are greedy, and be greedy when others are fearful. I think we've all heard that before. I don't particularly like the term greedy, but I very much agree with that statement. And I think that the opportunity to make really good real estate investments is here. So the main messages I'd like to get through to you tonight, the non-professionals and the professionals, is that real estate is local. And all of the crazy things that we read about in the newspaper every day, the terrible headlines, the bad news that bombards us every day. One of the things I'd like to tell you about tonight is, kind of a ground level view of where I think the market is in Denver, where our company experiences the market. I also want to encourage you not to be what we call show-me investors. Ron Welsh, I think, came up with that term recently, and show-me investors, somebody who waits for the good news before they start investing. I think if you do that, you miss out on the best opportunities. And lastly, to hire capable and experienced professionals to help you if need be. So that there's plenty of licensed agents here tonight, and ask them for assistance, and certainly ask us. Why single-family houses right now? As well as single-family houses, it's just an asset class. Most of the team has had experience in other asset classes, all real estate related. And right now, we think that the single-family asset class is by far the best place to put money in terms of liquidity, in terms of appreciation. It's the easiest to qualify for financing, obviously. And almost not anybody anymore, so I was thinking harder. But the qualifying for financing on single-family houses is easier than apartment buildings or commercial projects or land. Better tenant profiles. We've had a lot of experience with that in the last couple of years. We've learned a lot of valuable lessons on how to manage tenants. But they tend to have bigger tenant profiles than apartment units. Obviously, it's the most liquid type. It's much easier to sell a house than it is any other type of real estate. And the appreciation that comes with that, if you buy it at the right time, is substantial. Here's a chart by Ben's and my friend Lon. He does a lot of statistical research in the single-family asset class. And the top chart there is a picture of what happened during the last real estate crash. There were 4 distinct phases, and I don't really want to read all those through. I hope you can kind of read them. What we've been experiencing over the past 2 years, since '06, is obviously the dramatic fall that we all know about. And the question is, where is the bottom and when do you buy? Our philosophy at private market real estate is to average in at the bottom, because you never really know what the bottom is until you've passed it. So we started buying houses under this program in 2006. We were a little bit early, but the bulk of our acquisitions came in 2008. And we anticipate, obviously the line 09 through 13 is just a wild guess, as Lon puts it. But we are experiencing, in in the market the signs of this recovery. Foreclosure volume is declining, at least for the moment. We might get one more rush of that next spring. Non-distressed sellers are waiting. The show-me investors are getting ready to rush into the market. I think we're just waiting for the first headlines. And I think we've hit the bottom because the fix and flips are starting to come back, and the competition for rental properties is huge right now. This time last year, we could buy properties at will. We could go out and buy as many as we could afford to buy in any given month. And during the past few months, we have experienced multiple offers on almost everything that we are trying to buy. And that means we're having to start to pay more for them. That means we have to offer better terms, 7-day closes, no inspection contingencies, just to get the properties. So that's a significant change in the market that you're not reading about in the newspapers right now. But there is a gold rush going on. And I do think we have 3 to 9 more months of the best buying opportunities in Denver. But I would encourage you not to wait if you are in the market. The best cities to buy in right now, we have some plans for expansion into these mountain states. We're going to stay far away from the coast for a long time, and I imagine they'll probably have a little while to come around. But right now, I think Denver, at least within reasonable distance for expansion, we're looking at Albuquerque, Boise, and Salt Lake City for 2009, and then hopefully by 2010, Las Vegas and Phoenix will start bottoming out, and then we'll look into those markets also. So the conclusions that I'd like to pass on, I don't think that Denver is in a housing crisis. I think our market is actually relatively healthy. If you ask any agent about the current inventory levels in Denver, they are very, very low. The absorption of the foreclosure properties is very, very high and getting even higher every month. Now, we may experience one more wave of big foreclosures this spring, but I expect that those will get absorbed really quickly. We'll do our best to absorb a good number of them. But we already know Wall Street crisis, credibility crisis, liquidity crisis, and now credit crisis, which I hope will ease a little bit this spring. A new administration, a new year, some new hope, a bunch of money coming in from taxpayers to socialize all the losses, right? And it is in our opinion, a perfect storm for investing in single-family houses right now. Interest rates are low, inventory is available, and rent is high. Renters are falling out of the sky right now. We put a sign in the yard and we get 3, 4, 5 calls the next day. So it is really easy to rent houses right now if they're well taken care of and clean. You kind of get your choice of tenants. Follow Warren Buffett's advice. Buy when others are fearful. Buy before all that good news starts coming out. We would love to work with anybody in the room. We'd like to come see our offices just a few blocks from here. And encourage you, whether it's us or anybody else, to find experienced professionals to work with. Find somebody like Brian who follows those mortgage changes every day. It's a tricky business to be in. Work with somebody like Jesse, or a really experienced real estate agent who knows the business of investments, and you'll do well. Thank you for having us all here tonight. We will actually be around. I'm looking forward to mingling a little bit. But if I could just introduce, you met Jesse and Brian, but Renee and Angela, Mark and Nick are in the back room. These are all really talented real estate professionals, and we'd love to answer your questions and just talk shop anytime. So thanks for having me. I really enjoyed it.